Is the disinflation-deflation threat creeping up on Germany? Joining me down the line to discuss is Dr. Nikolaus Siegfried. Dr. Siegfried, inflation is still comfortably north of zero in Europe's leading economy, and there's no imminent risk that it will slip into negative territory. But some analysts believe there are several suspicious signs that there is potential for trouble. If the headwinds strengthen, could they spill into Germany?
I think currently we are seeing a very strong euro, and as a result we see falling producer price indices in Germany. So yes, you might think from that side that there is a danger of deflation. However, if you look at the latest inflation figure, which was 1.3% in November, and look at the details, then you see that this is largely due to oil and energy prices. Otherwise, it would have been around 1.8%. The lower oil price, we think, is largely due to Iran issue that looks like it's getting nearer to a solution. There is ample Saudi supply, so we don't see oil prices falling much from here. Also, you would think that low oil prices should be beneficial for any economy. So I don't think that deflation is a serious issue. Inflation expectations have crept up in the last couple of months in Germany. They're still, the 5-year horizon, still negative at minus 25 basis points, but they're increasing. So we think that at the current level, inflation is fine. There is no question of deflation as we see it now.
To be fair, the lower inflation outlook is offset a bit with the bank's modestly higher growth forecast for next year. In the here and now, however, there still may be a few numbers to worry about, including the fall in labour costs in Germany to the lowest level in 3 years. Is this a real concern for Germany at present?
That's interesting because a couple of years ago the OECD blamed Germany for having too high labour costs and having too high costs associated with labor. Now the discussion is low labor costs, and we are actually currently seeing in the new government negotiations about a national minimum wage, which would address the issue. However, we are not convinced that this is the right way to address low labor costs, as it's another round of regulations. Overall, we think that productivity is relatively high in Germany, which means that's why labor costs are low. Again, we think that this is a sign of a very sound economy rather than one that is in trouble.
At more than 6%, Germany's trade surplus is the topic of conversation and scrutiny. Is it more beneficial economically for Germany to focus on domestic demand until the euro recovery gains more momentum, or can Germany afford more spending?
That's very hard to do. There have been suggestions of more spending on infrastructure. That is not something that Germany can do to any extent. So the exports basically come from the car industry and the machinery industry, and it's very hard to make people not export. The same is true for consumption. German consumption has been relatively low compared to other OECD countries for the last decade or two. So it's very hard to make people consume more. It's a very long-term force that is very hard to fight. So yes, in theory, it might be more beneficial, but it's something that a government cannot really address and is not able to change.
You mentioned the strong euro. The single currency rose against the sterling after the positive German CPI, but how do you think the pair will trade given the recent pickup in the UK economy and divergence in respective central bank policy?
If I look at the euro-pound cross, the main driver over the last weeks actually has been PMIs in Europe, which have been very weak, especially in France and Italy, weaker than expected. They have been a bit better than expected in Germany, but not very much so. So I think the overall comparison will be the apparently strengthening UK economy, which I think is partly due to the very expensive central bank policy and the relatively weak euro area economy. Overall, we don't see any more weakening on the margin on the euro area economy. So we think that euro pound should trade sideways in the 120 range from here.
Dr. Siegfried, thank you. Well, viewers, that's all we have time for at the moment, but don't forget tomorrow we have the Swiss National Bank rate decision, and my colleague, Durham McDermott, will be bringing you the very latest on that. Goodbye for now.